that's the thing that we're interested in. Now, we've already profited some from the way down because we short at 41 and we've already been down to 31. We booked something. And that's one of the reasons why I always suggest that you do have to get to a point where you can trade with 2 contracts or 2 units. Those units could be sets of contracts. You could have 2 units of 2 contracts or 2 units of 5 contracts or something. But the important thing is that you have an initial place to get out, and then you can hold for the where it would normally be, or whatever your forecast is. Excuse me. And if they don't do that, you've picked up 6, 7 points or whatever it is from that initial contract, and that protects your remaining position. And you can still, in many cases, get out with some gain because you have that lead in that position. So it's very important to recognize how much of a disservice you're doing to the probabilities by trading with only one contract. So if you're trading with one contract just for an initial exit and to say, oh, I picked up 4 points, then you're doing yourself a disservice because your next trade is easily going to risk 4 points, meaning static risk. That's not the real risk, as we've talked about, but the static risk, meaning $4 of price movement. And therefore, your trading results become too binary. You know, every time you trade, you're risking the same amount that you made on your last trade. I really hope you understand how useless and hopeless that is if you are doing that. Or the 2-point thing where people trade for 2 points and we never risk more than the 2 points on the, risk side. And I've been through all that. It's nauseating, I know, but it's also true. So it's really important that you don't do yourself do the probabilities a disservice by only trading with one contract. Even as a starting person trading, if I was training somebody, I would say you can't trade with one contract. You have to start right out of the box trading with 2 units, 2 contracts or 2 units, so that you have the ability to take partial exits along the way. And then if the market is going to do something unusual at the end of the session or in some time and place, it's going to do something unusual, you can get out of the remaining position. You have a 6-point, 7-point lead or whatever it is. And then you are able to take advantage of getting out when it looks like things are going to go the other way. Or maybe you risk all of the money you made and it's pretty much a break even. The goal is to give yourself the opportunity to have that ability to get out with already having taken a gain. So you have to always, in my opinion, you have to trade with 2 contracts. If you don't do that, you're doing a disservice to yourself and to the probabilities. And then when you are trading with 2 contracts, you have to trade with more money than you're going to be risking on your next trade. So you have to have a target that represents a distance that's greater than what you're going to, distance and points that's greater than what you're going to risk on the next trade.